Now with this one, please excuse me, I did the first and foremost before shot. I'll get to it after. I'm going to have to draw it all on basically is what I'm saying, because I did it, but I misplaced the file. I do believe it to be on my old MacBook, because this was going back nearly 2 weeks ago now, and I've had a new MacBook since. So Aussie dollar, now the daily time frame right in front of us. First and foremost, I'm just going to go to the weekly. Actually start with the monthly, just to give you a little bit of a breakdown. So Aussie dollar on the monthly time frame, we know thus far I have explained about the moving averages. We've recently had a MA crossover on the monthly, and I did say, you know, watch the monthly time frame, but it's not of high significance because we can in fact lag. However, the monthly MAs have just crossed over, the first time in 3.5 years. What's also significant about the Aussie dollar, again, basic key levels, 0.7 held pretty strong. We had a few spikes, but we couldn't really maintain anything below with substance. And what I mean by that is we didn't have any bearish candlestick formation close, full bearish candle body. The best we could really do was this here, which was kind of all over the place. We didn't really get a strong close on this candlestick, and this candlestick too. We spiked all the way down to the weekly support and back above and closed above the 0.7 level. So ever since then, this period of time, I have looked at Aussie as being a potential bullish reversal. So yeah, going down to the weekly. So weekly time frame, we have in fact had, well, firstly, we're looking at Aussie making new highs past this, because remember, if this here, firstly, this is a huge bullish engulfing week. So we've came down to the weekly area of support, boom, bullish engulfing, tweezer bottom. And we could say this region does hold some significance, all right, but I'm not going to focus on that right now. This is a confirmed higher low from the base point here. So we have the higher high, higher low, a new higher high is going to form soon. So just with that price structure in mind, looking at Aussie to come to 0.7900, not even further than that, to be honest, maybe even up here at the monthly resistance. So we have an idea in our head where Aussie can go, and we have a bias. So monthly bullish due to 0.7 holding firm, moving averages crossing over, and now we actually have the about a potential of a new higher high being formed. Going down once more to the daily time frame, we have a lot of clustered, messy prices all over the place, but we can see a little clearer, even though we don't have significant higher. Well, we do actually in this case. We have a higher high, higher low point here. We have a higher high. Okay, confirming that we've got the shooting star. We have 4 days there where you can just see across here, the crosshair, where we had 1, 2, 3, 4. We could not close above 0.7, well, especially 0.7, 650. Remember, round numbers are significant as well, especially on Aussie dollar pairs, well, Australian dollar pairs, sorry. So we have the higher high, higher low, we could say around here, the base forming, maybe even 1, 2, and 3, but we did get a breach here as well. It's really difficult to tell on this daily time frame. We will probably see more significance on the 4-hour, and yeah, after that, we've come up messy. Bullish, bearish, bullish, bearish, bullish, bullish, bullish. It's not really giving us full body bullish candles. I think it's trying to shake off a lot of long, the people who are long, trying to trick people to go short in this case, which we can see a lot better on the 4-hour. So on the 4-hour time frame, we've established this potential for a new high, which not too long ago, actually, the last 4-hour candle, we've hit monthly resistance 7550. With high accuracy once more. But I am projecting Aussie dollar to go higher. So here we can see we have higher lows, higher low, higher low, higher low. So it is creeping. Remember, as I said on the prior videos, the daily and the 4-hour hold the most significance for higher high structure and higher low structure. Very basic, but misunderstood sometimes by many analysts and traders out there. But yeah. So my entry on the Aussie was all the way back here, and I actually used the previous day's highs and the previous day's lows for this one. I'm not going to put them onto the chart, but I'm just going to show you right here. So that was the previous day's low point, Okay, we've rallied up afterwards. I think that was in the US session. We've came down overnight in the Asian session, and just before London Open, I can't remember off the top of my head what fundamental release it was, but in this particular 4-hour candlestick bar, we spiked all the way below the prior day's lows right here, and we've spiked all the way back up and probably closed 35 to 40% of the initial down move. And we can also see as well, let me just fix those labels on the side. Bear with me. There we go. And you can see here, it's not just the prior lows. The news has forced it to the downside and straight through 0.7500. What we've seen after that in the next 4 hours, we've had a huge bullish run up. So the price has been whipped. A lot could have went on down here. We could have activated short sellers. We could have hit stops from the buyers after this initial run. All of the buyers in these 4-hour candlestick bars here would have stops under here. So we've spiked out all of the buyers. We've reversed at substantial with volume. There's a lot of volume there, substantial volatility, and as you can see, we've continued the overall up move. Now, I did have the before shot on the chart, but what I did forget to put on the daily was this. We had the Fibonacci. So with the fib, I've gone from the low point here up to the highs, and I brought it across. So we have 1, 2. I didn't go to this point because if you check this out, we can see there that fib's already done. A, B, C, D. So I've dragged it up one more. Again, trial and error with Fibonacci. This is the one that sat nicely with me at the time. So the fib here, I know this is a substantial area for a B point because I've already mentioned at the start of the video, 7650s, rejection, 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 right at the top of the wick. So we have A, B, C retracement, boom, one there. Spike down, spike up at the 61.8, 62%, and the upside target, our D extension 1 is here, 7782, and my target for this trade is 7780. Target 2 is up here, but that's kind of irrelevant right now. I do believe it's going to hit that, but for this example, just to finish it off, I am going to just run over this at the moment. So what we have is our target zone at the fib point, my entry on the Aussie dollar. I've been in this for some time now. Remember, the target on this one was around 200, 300 pips. So I'm not looking for this trade to come through overnight. Right, my stop. Whoops, I've gone the wrong way there with the risk reward. Sorry, bear with me. Long position. Right there. Long position. So my stop loss, I went 15 pips below the daily low. So 68 there. So we're looking at 80, just here, 0.7480. Okay, because if the market rolled over once more, I believe that it could have took out this spike low and maybe went lower. But remember, we're following the overall trend. So that's that, and then target 1 is in fact here. So it's a 1 to 2.6 risk reward ratio. And for this video, I'm just gonna, obviously because I lost the first clip, it's on my other MacBook. This is the trade more or less complete. Now, because it's at monthly resistance 7550, it could pull back beforehand before going further to the upside. But because I'm happy with the amount of pips gained on this one, I'm looking at just over 200. I am going to close this trade, okay, or maybe even take 70% off. What I'm waiting for is tonight's close. Over here at the time of this video, it is 10 to 7 p.m. GMT, and it's 3 hours until the daily candle's formed. So I'm going to see the strength of the daily candle before actually doing anything with the trade. If we're still hovering around this area now, I'm probably going to take it off and then maybe look for entries into next week, maybe for Fib 2. But again, once more, what I've done here, I've looked at the overall trend, monthly, the weekly, followed the daily, zoomed into smaller time frames, looked for points of more or less market manipulation off the news. In this case, this is just a simple daily low spike, a support spike, close above 7,500. So again, I'm taking round numbers into consideration, and I've gone in straight after the bullish engulfing. I've left the target open to the higher time frame data to get the best risk reward possible, and as you can see, after some time it has in fact got there. We've hit our monthly resistance, and you guys know, well, the ones we've experienced, we've been with Astro for some time, how important these levels are and how accurate they are. The market could pull back before going higher. 200 odd pips in over a week is great. Is great for me, and what I'm now going to do is I'm just going to sit back, and as I say, I may take 70% off this trade, but that example there is enough as to why I actually entered the trade, where the targets were, following the overall direction and so on. Where Aussie dollar is likely to go now, I'm not too interested in, maybe until the weekly candle close. I need a nice bullish weekly candle close, and maybe I will start to search for pullbacks to go long into next week. And even here I can see another nice little entry where we're forced back, boom, bullish engulfing. This is confirming a new higher low. We have a higher low confirmed there, mini little bullish engulfing. We have a 1, 2, 3 pin formation here, confirming another higher low. Okay, and we finally, well, we haven't yet on the daily. Remember, the market needs to follow the bigger picture, the bigger time frame, but we do need to make a new higher high past the daily higher high. So I hope that helps. That's a nice Aussie trade there, a nice successful Aussie trade. Very, very simple. Little to no drawdown on this as well. So even once the market was up here, the market as maybe broke above the resistance, or we're halfway to our target, we can in fact bring our stop loss and we can bring it past our entry point. Just remember that, or we can take 70% off the trade. So yeah, that's it. Aussie dollar before and after. Apologies for not having the bang on before shot there, but you get the picture as to why I entered the trade.